Condo association insurance. A very complicated insurance question that has to be answered. Are you on the board of a condo association? Are you a property manager? Or maybe you're an owner? We're going to talk to you right after this. Condo associations can have a very complicated set of insurance problems. Obviously, you have an association that manages or has a master insurance policy over a larger building or a subset of smaller buildings. And then you also have the individual owner's interest, and then a lot of lenders are involved. If condos are changing hands or being sold and purchased, lenders are muscling their way in and trying to tell people what type of insurance they need. So what are the tips and tricks, and how is this managed well if you're either on the board of a condo association or a property manager here in the state of North Carolina and beyond? Let's talk about it. Number one, you must know your bylaws. The bylaws of a condo association matter exponentially in the way that the insurance has to be written, and in the way, frankly, that the master policy is going to cover individual unit owners if there is a problem that occurs. Now, I can't dissect and get into all the different things that could go wrong, but let's just use a basic example. The first being, what if a water pipe were to burst on the third floor of a condominium building and it starts to trickle down and damage walls and other things in units below it? Unit owners have to make sure that they understand where their obligation begins and where the condo association's ends. One of the best examples I can give you here is this. What if there was a small kitchen fire that occurred and it started to burn the walls and burn the cabinetry? Well, those cabinets were originally installed as part of the condo association. However, because your bylaws state that you as a condominium owner are responsible for what is called the walls in, the walls of your unit inward, that loss is going to be entirely your responsibility, even if it could have been faulty equipment or something maintenance related inside of your specific unit. Bottom line, your bylaws matter. And if you're on the board or if you are managing a condo association, make sure you fully understand what those bylaws say so that you can make sure your condos are insured correctly. Number two, a quick tip is to verify that you understand your deductibles. Should seem pretty simple. Deductibles are a stated amount that you, as an owner or an association, must absorb first before the insurance company would pay out on any peril or claim that could have occurred. Where associations get in trouble is often on their roofs. Roof insurance, depending on where you are, I'll call it roof insurance, is often subject to something called wind and hail percentage deductibles. So if your association master policy has a 2 or 3% wind hail coverage, that 2 or 3% is based off of the entirety of what's actually insured. Suffice it to say, without going through a whole math calculation here on this video, you could be, as an association, on the hook for tens and tens of thousands of dollars if roofs were damaged. And you would have to absorb that first as an association. So, check your deductibles and then check your bank accounts. Make sure that you've got enough money set aside so that if there was a problem, you can either absorb that deductible or simply replace those roofs as time continues to move forward and they age naturally. You should never rely on the insurance company to come in and save you if you've poorly planned to replace those roofs in the past. Number three, choose an insurance provider that can handle certificates of insurance very well. The reason this is important, if you are a condominium owner, again, or a board member or managing a condo association, oftentimes transactions occur quickly. You may be wanting to sell your condominium and because of that, some other person's buying it and they have a lender that requires certain things of the association master policy. That's not the insurance that that person can buy. That's the insurance that the association has purchased. Make sure that you ask your insurance at the association level how quickly they can get those certificates of insurance out the door. Reason that's important, it can hold up closing, it can make it difficult to actually buy and transact condominiums within a building if that particular need is not met. Make sure that your insurance company can handle certificates of insurance. Fourth and finally, shop your coverage. Yes, shop it. Even those that we insure here at Callahan & Rice, we make sure that we take the property coverage to market often. Reason being, the property insurance market is very volatile. It moves up and down all over the place because of losses and catastrophic losses like hurricanes and whatever is happening in your area. Insurance companies have to make adjustments quickly. And because of that, property rates from one insurance company to another may be offset by a significant margin. And so making sure that you're using a local insurance agent or agency that can help you shop what those insurance coverages are needed to be with different companies will allow you as an association to better manage the resources that you have to be able to pay for claims, pay for those upgrades, get a pool put in, whatever needs to happen. You have to work with an insurance agency that can help you manage that expense in a very good way to help, obviously, you save more money as an association. So if you have made it to the end of this video, thank you. That's a lot of information, but it's important information. Demystifying condominium insurance is a challenge. And so we would invite you to contact us here at Callahan & Rice. We have a wide variety of different companies and products that we have available for condominium associations and have people here on our staff that specialize in these specific risks. We can definitely help you with whatever problems you may be experiencing. On behalf of all of us here at Callahan & Rice Insurance Group, thanks for watching.